2, 1. Good morning, ladies and gentlemen. Thank you so much for tuning in to this session of the Fireside Chat. Today we have Mr. Alex Gomez. Now, Alex Gomez is presently an advisor for CID Realtors at KL Track. He's actually a veteran in the real estate industry with over 30 years of real estate services. He is an advisor to ERA Malaysia, a real estate property solutions co. He has been a board member at the Board of Valuers, Appraisers and Estate Agents Malaysia for 11 years, which ended in 2018, but now has been called back to serve on 2 committees of the board. He is a board member of INSPAN, an expert lecturer at University Malaya, and he is also a well-known speaker on selected topics related to real estate practices and services. Thank you very much for joining us today, Alex.
Thank you, Ernest, for the invitation.
So, ladies and gentlemen, today what we wanted to do is to delve into Alex's point of view and also based on his experience, where he thinks the market will be, where the opportunities and pitfalls could lie, and ultimately at the end of the day, to look at options for us to make better financial decisions. Now, Alex, just right off the bat, I just wanted to ask you, where do you think the market is headed for the end of this year and maybe even to 2021 and beyond? What's your point of view?
Right, okay. Now, from what I gather from many of our frontliners, our negotiators here, the market is a bit flattish, especially on the sale and purchase side. But as you can see, the rental market is still moving. Many of my guys do a lot of, quite a number of industrial rentals. So that is where they are focusing on right now. But in general, I would say the new project launches or what do you call this secondary market in terms of purchases will be flattish till the end of this year. And coupled with the traditional so-called end-of-year holidays whatsoever, and with people being more cautious on actually putting where the investments, where they want to put in their investments, I think I foresee a real dull market for this year. Of course, all of us are well aware that everybody is looking forward to the vaccine to combat this pandemic. But your guess is as good as mine when it'll be available to the mass market. Then again, how are people going to respond now with this CMCO and all that is coming in, restricting people from actually going to the offices? It's going to affect a lot of people. Now, what about people that are going to lose their jobs as a result of these companies not being able to sustain their overheads? There are many. I've heard of companies, especially when we went around looking at some of the manufacturing concerns, that they have laid off up to at least about 30 to 40% of their staffs. Now, what's going to happen is that how long can the government sustain? So these are a lot of questions that we need to look at. But overall, hopefully some of the property gurus out there in the market through the mass media have said that it'll probably pick up in 2021. Well, to me, it's left to be seen. I've gone, like you said, I've been in the market for 30 odd years. I've gone through quite a number of cycles. It'll take time. This is the first time we've been hit with a pandemic. And this pandemic, nobody actually predicted that, but that this has a real adverse impact on all kinds of properties in Malaysia. And also Ernest talking about this moratorium with the banks. Now, when it's going to be lifted, what are people going to do if they don't have jobs or they've taken pay cuts? Are they going to cut down to what do you call low end of properties, sell their properties? And to sell their properties also, if you go by market value, you're going to find it tough. Right now, you see most advertisement in WhatsApp or whatsoever. What people are doing is they're saying below market value, below market value. Why? That's the catchphrase. So people think, hey, if the market is say 500,000 and is 30% below market or 20% below market, it may be a good buy, right? Of course, there are still investors around, but the question is whether they're going to put the money down on that particular property. And of course, they're going to look at the ROI again and whether the capital appreciation of that particular area. So there are a lot of questions that we actually cannot answer. I mean, so you say I don't have a crystal ball right in front of me to see how it's going to look like in the coming years. But to me is, if the market is ever going to improve, it is we need the vaccine. I mean, let's face facts. People are afraid of this disease. People are actually very cautious, but then they are sometimes put under pressure to go to places. Why? Because they need to be at the places to maybe cari makan or whatsoever. So can you imagine the impact on society with this pandemic? We all hope it can go away, but the question is how? Nobody can answer that.
Wow, Alex, just out of curiosity, I know because of your many, many years of experience and seeing so many economic cycles, is there any situation in the past that comes even remotely close to what we're facing right now? Maybe even the Asian financial crisis. Is there something similar to what's happening right now that happened in the past?
No. Right now, the Asian financial crisis was totally different. It actually affected a lot of us. Many real estate firms actually downsized because basically they couldn't sustain. The negotiators had nothing much to do. That was one of the worst crises that during my term, in the late 90s, or it started in 1997. But if you actually look at it, Ernest, right now, the crisis is more people's perception towards what is actually happening out there in the market. Many are caught with properties that they can't even rent out. And I agree with you, the overhang there is huge. NAPIC has put out the list in terms of the states with the largest overhang. But believe me, like what you said, this is the first time we are going through this pandemic. I have never, right, from a personal point of view, I have never come across something like this for the past 30 years or so.
Noted. Alex, do you see any bright sparks then, or anything that when you say that the market could be flattish, what particular type of product could actually keep to that flattish demand? I know you mentioned a little bit about rentals. We'll get into that shortly, but in terms of sales, do you see this as an opportunity for primary market sales happening more, or you see the below market value sub-sale happening more?
From what I gather, I look at the market. If developers launch landed properties in selected locations, the chances of it being sold is so much higher. A couple of months back, I believe that, what do you call in Kinrara, they launched this double-story link houses within the range of below 500,000, and there was a big queue. Okay, as opposed to high-rise or strata title properties. The biggest overhang, as I see, is in the strata title properties, especially apartments and condominiums. They are really affected because we actually overbuilt. But landed properties somehow enjoy the thing where people feel that they are standing on soil, so to speak, on the ground. They have less hassles as compared to owning a strata title properties, having the JMB, JMC, or AMC for that matter, having problems with your neighbors, and of course the construction, how well it's constructed, that the whole thing. I see, like what you said, what you asked is the way to look forward is landed properties within affordability of the average income earner in Malaysia.
Well, I think one of the things that the MCO period has shown us is that we are able to, or we need to become more digitized in terms of how we do our work. In the past, I think a lot of people want to live very close to accessibility or very close to the offices because they have to get there and come home. But with the digitization work that is currently transforming how work happens, as long as you have a good, stable connection, I think theoretically you could work from anywhere. And if you actually have a home that you can work out of, the length of time it takes to go to the office may not be a key factor moving forward for the younger generation of buyers. What do you think, Alex?
Yeah, of course. Like you said, the connectivity is already there. So that's why some developers use the TOD kind of development to convince people to invest in them. Transit-oriented development, to be exact. Why? Because they can work from home at the same time. They can just jump into the LRT or the nearest MRT, and then that's it. They're in the office if it's so required. And now with the government stressing on working from home, I guess people will start doing that. But then again, have the Malaysian government actually done a census and see how many office workers can actually work from home? For example, like us, estate agents, can we work from home? Yes, to a certain extent. But if people want to see properties, we have to move out, right? What about all the salespeople, all the business people? Can you work from home? No, you have to be on the move. Okay, I think a majority of Malaysians are, in a way, business people. Unless you're a government servant or working for some institution where you can operate from the house.
Yeah,
I think that's what you've got to look at.
Yeah, I think you're quite right. I think not all and every one of us are going to be able to fulfill that working from home ability because of the need to have probably working in groups, or even maybe the data access is not secure if you have to actually punch into a mainframe somewhere. So definitely these are the things that would have to be looked into for us to become more versatile, and work from home becomes a tall order of the day right now.
Right.
Alex, I just wanted to ask, because of this pandemic happening since March, we've also seen a slowdown in the number of launches by the developers. Would this not also be then the opportunity for the excess hangover to be mopped up because there's actually less new product coming onto the market? Or do you just see this as a temporary reprieve where once things start to get better and back on track, the launches start happening and then it would just exacerbate the challenge with the hangover stock?
Okay, in a way, how do you actually get rid of the excess hangover? To mop up, there must be some reason for people to actually put their money there, right? And the first thing they're going to look at is, right, are they going to get a rental return on that particular place? And with a lot of people actually maybe losing their jobs, how many of them can actually afford the kind of rental you're looking at? Okay, so if you buy even those the overhang properties, I think they are more in the region of 500,000 and above. Am I right? I mean, you can see the statistics given by NAPEC. It is quite clear. It is above a certain range. How many Malaysians are in the market to absorb the kind of properties? I mean, apart from buying it cash, many of them will be looking at loans. Now, to service the loans, that would be another situation. And how much rental can you get? If your loan is going to be, if you're going to service the loan at maybe say 4,000 a month, and you're only going to get a rental rate of about 2,000 to 5, how are you going to make for the shortfall? So people are going to look into that and see whether it's worthwhile to pick up these overhang properties. But then again, are the developers going to actually bring down the price? Or they're going to rent out themselves? It's a big question. But the launches, like what you said right now, are slower. Why? Because developers feel the market may not be able to absorb. So they are very, very cautious. And then again, Ernest, you and I know for a fact that loans from the banks are a big problem. That's why whenever our negotiators sell any properties, there is always a special remark in the particular column that subject to bank loans. Okay, it's a big thing because if they cannot get that margin, all right, of 70, 80 or 90%, or don't even get a loan, right, the whole deal is called off.
Do you see
that's another area to look at?
Yeah, do you see then the rent to own scheme probably be the intermediate way out of this instead of just buying outright if they cannot qualify for the loan?
Yeah. Then again, how successful is this rent to own scheme? No statistics have actually been published, whether by Maybank, who was one of the front runners for this program, or the developers for that matter. Uh, we we don't see the statistics. Why aren't the young people actually taking it up? Rent it for the next 5 years. Part of it goes towards your, deposit towards the purchase of the property, and then probably buy it in sign the sale and purchase agreement in a couple of years down the line. There's nothing to show, and neither does the market actually talk so much about it, so that we don't know actually what's going on, frankly speaking.
Alex, then do you see that maybe the other way forward is that if there's no rent to own, maybe even a longer runway for the loans, i.e. maybe even intergenerational loans now may become a thing that should be considered, because it may be just very challenging to have housing and having fluctuations in jobs, because I think jobs may not necessarily be a permanent one job for a lifetime, maybe even several jobs at the same time, especially with this gig economy, just to make the numbers work. Especially if you're married and with children, sustaining a car or sustaining transport and a property and paying for the cost of living. Maybe an extension of the loan could be the only way out. What do you think?
Well, that one way that I would agree with you, but the question is how long? Right now, I think, if I'm not mistaken, maximum is around 30 years. Years back, I remember when way back in the 90s, we used to have the banks would give loans where, second generation loans, the kind of thing where the father can take and the son takes over to a period of time, so it can extend well beyond the 30-year period. How well it went on, we do not have statistics to comment upon. But if you look at Bank Negara statistics, that was sometime last year, I had a glimpse into it. The number of rejection of loans last year was very, very high, because the banks were very stringent on these loans. So whether they want to be lenient or not, taking into account the uncertainties in the market, whether the banks want to expose themselves, that's another question. Can the government actually come in and force the banks to actually give loans? So it's left to be seen. I mean, no banks would want to be caught with properties which nobody's servicing the loan.
Yeah, true. Or even properties that are below the value of the loan amount that they've given out. So it makes it like the US subprime crisis. It makes it untenable to even service the loan because the value is just mismatched.
You're right.
Alex, do you see that, of late, there's quite a few advertisements that have come across on social media platforms, or even sometimes through social media messaging channels, of people saying, it's below market value, and sometimes there even could be a rebate that's offered to entice people to say that, yes, this is a good time and a good deal to buy. Do you see this as actually a challenge in terms of the value being overstated to begin with, or do you see this as something that maybe the seller says, I really need to dispose, I'm willing to take a haircut, but I just need to make sure that the numbers look right, so I'm willing to do something like that? And what do you think of those people that say, well, instead of buying one, you should buy maybe 3 or 4 or 5, and then build your cash flow to sustain yourself over the next 3 to 5 years? What do you think of these kind of practices?
These kind of practices will go on, okay? Especially in these kind of times where people are actually desperate to let go of their properties. Like I said, there are negotiators advertising at 30% below market, 20% below market. These very, very, very common, because people just don't want to be holding on to properties. They would like to liquefy the properties and see some good cash flow coming in. But then again, if this is going to be the trend, if everybody wants to give a huge rebate, who are the people actually going to take it? And is it worthwhile to take up that property, knowing very well you may not be able to rent it out unless you feel that it's for your own use. If you are staying within the vicinity and your own house is being, your owner tells you, hey, listen, I want to sell it for, say, example, 500,000. Whereas down the road, another house is being advertised for 350,000. Would you make the decision to actually buy that property? I mean, if it's within my means and if I am in that position, I would grab it. Why not? 350,000 is my own home. And if I qualify for a loan. So I think people be more rational in how they're going to put their money down. It is common. That's why we train our negotiators to actually sit down and be a consultant, like what you said, and not a salesman pushing down properties down people's throats, which is happening at most exhibition centers and sales galleries. And that's why many of them are caught with all these so-called freebies being thrown in. At the end of the day, they are caught with a property which they can't even rent out.
Alex, do you think that this is the time when reality will take hold and the buyers now will have a dose of, okay, let's reset the prices. Prices moving forward will be much more marked down to where reality valuation will be? Because first of all, the banks would say, listen, I'm going to mark down the value. So I'm not going to lend you what your SPA price is saying because you got to have skin in the game too. So which means that the buyers now really either have to have access to cash, either a steady job, or be able to not take such a huge loan and pay a bigger deposit. That's the only way to move forward, I think.
Yes. I mean, the question is, for example, if a particular property in a good location excites you, and you know that the asking price is way above the market value or the valuation price, what will happen? Like what you said, unless you have a good cash flow, you can make up the difference. Can you imagine if you buy a property for, say, 1 million and the market value is, the bank only gives you 800,000? Literally, you have to come up with 200,000 cash plus the 10% or the 20% that the bank is going to give you the margin at maybe 80%. So 80% of 800,000 is, the difference you got to come up with. But then again, if you have the cash and it's in a good location, people may go for it. And this has happened, and I've seen it personally happening in certain parts of USJ, Subang Jaya.
These are called what? Fire sales, I believe, if that's the case.
Yep, something to that effect, right? Because people want to be located in a very mature market, and they feel the capital appreciation maybe over a period of time will be up, and they may see the kind of price they're looking at.
Alex, just as an example, if, for instance, such a fire sale were to be there, and I got, as a potential client, the opportunity to look at it, how do I know whether it's really a good deal or whether I'm going to get conned into it? Is there any service I could tap into? Is there anything I can do to make sure that I walk into it with my eyes wide open? If something that, say, as you said, in the past it was 1 million ringgit, now all of a sudden it's 800,000, but I really wanted, I was willing to pay 1 million, now it's 800,000. Should I hold myself back, or should I say, like, is there something else I can do for a sanity check? Who can I turn to?
There are certain portals that give you comparative market analysis of properties in a certain area. My company, CID, we have that. So my negotiators, before they go for a listing, or if they say there's a fire sale, they can check the history of that particular area, whether the price that they're going for is actually worth it or not. The other ones that you're well aware, of course, you got to subscribe to it, is bricks.my. And I think some of the property portals like iProperty may have that feature with them, or Property Guru may have that in their feature. So it's always good to do a bit of homework first. They can call it a fire sale, but at the end of the day is what are the recent transacted prices in that particular area. Whoever the buyer is or whoever the agent is must be able to get that kind of information to give to their particular purchaser to know, yes, it is a fire sale, go for it. Or it is an artificial fire sale, watch out.
So one of the key things that you are saying, and I completely ascribe to it, is that do your own homework. And if you still want to do your sanity check because you may not necessarily have the experience doing it, just talk to a reputable negotiator, the one that has the red tag, right? Just make sure that they have the red tag.
Okay, yeah, that's for sure. But at the same time, they can travel around in that particular area if they don't have access to these particular portals or they're not subscribed. There will be signboards around that particular area of other agencies, right? You can call them up and do a sort of a spot check and see what kind of asking prices are going up there. And then you can also offer to that particular agent, hey, this property that you're advertising just down the road, what's your asking price? If he says 800, then he said, hey, would the owner accept 600 based on the fire sale that you have? Okay, to just give you an indication whether that particular house can go for that kind of price. Okay, to actually determine whether this is an actual fire sale.
Right. Alex, the other thing that is also concerning is that I've been also keeping track on some of the auctions that are happening right now. And it's quite common to see certain properties, it's not one time going on auction, it's not two times going on auction, this is the third or more times going on auction, and they still cannot find a strike price. Then does that mean that those first people who have purchased those units over there, just say if it's a stratified development, all of a sudden they realize that the value that they have paid for and are still continuing to pay because they have a job or whatnot, now the value of that property that they have may actually be lower than what they actually bought it for because of the auction property still not being cleared in the market after 3-4 rounds.
Yes, it is happening, even for certain landed properties. Not so much for high-rise again, but high-rise, can you imagine that, if you are staying in a particular condo, like what you said, and then your neighboring unit is going for 30%, 40% below market going for an auction. And people are going to determine your value at that price, and you are still paying the bank, like what you said. So what's actually going to happen? Because people are looking for a steal. I have been for auctions, and I can tell you some of the syndicate members are really there to push the prices down. Okay, it is happening. That's why I think the government has come up with e-auction, the whole works, but don't know how far it has been successful. But frankly speaking, the end of the day is a poor borrower of that unit. Can you imagine if he owes the bank a certain amount and it sells below that amount, he or she is accountable for the difference.
Yeah, that's really bad.
Yeah, and that's the worst part.
Okay, then of course, I know that in equities, if you borrow money to buy, and for instance, if you go on margin financing, and if, for instance, the stock price turns south and there's a margin call and you have no cash, what happens is that there's usually a forced sale on the equities you have. And in the same example that you said just now, they forced sold all my shares and I still have an outstanding. That means I'm still personally liable for the outstanding. And until I do so, I'm not a discharged borrower. Now, similarly, if you look at the example for those who have bought properties that are going for tremendous auction haircuts right now, do you think that there could be a, so to speak, cash call or margin call for the other borrowers that, hey, the value has dropped? That would be really a huge knock-on effect for the entire market if that were to happen, and I hope it doesn't. That's my personal concern, that if this is the case, it may affect all of us.
It is bound to happen. But then again, if you are staying in that unit, it's okay because you got to have a roof over your head. But then those investors who are actually renting it out at a certain price, they may look at it, they may see whether they want to divest over a period of time. But of course, many of them know if they can better sustain now. If they want to divest, they got to really take like a big haircut, like what you said.
Okay. Well, thanks, Alex. I think we've talked a lot about the real estate sector, the outlook, and also where you think the opportunities and the pitfalls are. Now, for other listeners and viewers who are actually looking at, okay, I'm in this situation right now whereby I may be getting a haircut in terms of the income that I have from my work, or my gig economy job may not necessarily be very consistent, but I need to actually look at how I can grow my income. I'm looking at maybe how we can help them with information on where they can make money or they can build a career, maybe a second career right now, and then maybe later on a better career. Would you recommend people to look at real estate as a career?
Okay, just to give you some statistics, Anis. The board has registered more than nearly 40,000 negotiators from the year 2013, if I'm not mistaken. Now, the active ones are only about 19,000. That is the last count, as we know from the board's statistics, those who have renewed their rent tax, so to speak. Because all estate agents, all rents must carry a tag, which is renewable on a yearly basis by sitting for a CDP course for half a day. Now, to the general people out there, if you have actually lost your jobs and you will feel that real estate is your passion, first and foremost, you must understand, don't take it as just because you have nothing else to do, come into real estate. Because in real estate, it's not you come and try real estate. Always believe in this. You do not try real estate. Real estate tries you. That is what they should think about. Because you joining this profession, how well you're going to do in this profession is, of course, it's all in your hands. But many people cannot sustain in this. Why? Because it takes actually a very different breed of people to do real estate. But if you feel that you can give it, you can want to come in and see that whether this can sustain, most estate agencies have a career path. And if you feel that you can follow the career path, okay, to the dot, so to speak, the chances of you becoming successful is there. But like, and is what I tell you, the Pareto principle still works in any real estate organization. 20% of the staffs will give you 80% of the business, and 80% will give you 20% of the business. It is always like that. But my advice to the public, whoever is going to listen to this fireside chat, if you feel that you want to know more about real estate, go and join the forums where many associations are doing it. Enroll for the NCC courses, which I am going to also be part of them at Imperial College, which will be kicking off by the end of November if the CMSO or EMCO is lifted. Come and listen to the two-day course and see whether this profession you can fit, or you can fit into this profession. Because it entails a lot of sacrifice, but at the end of the day, if you make it, you really make it. It is worthwhile, it can sustain, right? As long as the most important thing that you have to have in this industry is people skills. If you can mix with people of all kinds and you have the ability to adapt in any situation, then
Okay.
let real estate try you.
Alex, I want to take this one step further. So what you're suggesting is probably to explore the industry first, as opposed to explore the players in the industry to see whether the industry is something that you can adapt to and can probably give you what you want. What's the next step? How do you evaluate which are the players in the industry that are serious, or how would you evaluate to help the listeners to go like, okay, probably come in and listen, participate, open your mind, open your heart, and then after that, what should you do next?
Okay. Now, after knowing about real estate, the most important thing is the company that you join. Like, and as you mentioned earlier, some of the companies pay very high commissions, but don't have backup support. The most important thing whenever you join any company is the backup support, the office support. You're alone by yourself. Some estate agencies advertise as high as 90, 100% whatsoever commission that they pay out. Let me tell you, if you cannot close a deal, zero sales of 100% is still zero. You should work for companies, join companies which give you reasonable commissions, where they give you good support, whereby they enabled you to close deals. How are you going to find these companies? Is you have to do a little bit of research. Go into the company's websites. And if the companies do not have websites, don't waste your time. Companies that have websites, they are serious about this business. Okay? And when they're serious about this business, they know that they want to grow. And if you are part of them, you can also grow. Real estate is not a business, it's a profession. So it is a career path. Everyone out there should understand this. It is not you come in here and you get a listing for 2 million, you're going to close it the next day and earn so much money. It's not going to happen that way. Let me bring you all down to earth. There's a lot of effort, and there's a lot of effort that goes into actually marketing a property, especially so during this pandemic. What so in the good times, then it's a different matter entirely. So my advice is go for this so-called 2-day course. It's a small investment. Understand the requirements of real estate, and then do your homework on joining whichever companies you feel can help you grow in this industry. Believe me, this industry can be lucrative provided you work according to what is stipulated by the company. Work according to your plan. It can be done.
Wow, thank you, Alex. This has been most invigorating. Not only do we have a slight glimpse into what I would probably consider a cloudy crystal ball, but I hope that as things go into the future, things get better for us here in Malaysia, but also an opportunity to look at maybe a different career path if the one that you currently are on is not going to get you to where you want to go, or not going to get you to where you want to get to with passion. I think that we only have one shot in life, and we might as well make the best out of it and follow your passion. Is the clear clarion call I'm hearing from you today, Alex, and I really want to thank you for that message. The other thing is that, ladies and gentlemen, if you want to connect with Alex, he's got a Facebook page. You can connect with him there, or he's also got a LinkedIn page. I'm sure you can ask him the questions that you want. Alex has always come across to me as a person who is extremely knowledgeable and very, very free with advice, because he really is very passionate about this industry. And if you are really serious about this or have a really serious question, I'm sure he will not say no to give you some time to hear your question out. The other thing I wanted to ask Alex before we go on is this. I know that in a lot of 9-to-5 jobs where people sign up and they work in corporate, 60, 65 is the age of retirement. Because this profession is where you hire yourself, do you see yourself retiring?
Retiring? No. You know, I mean, sorry to say this. Many people have asked me, hey, Alex, when are you going to retire? I say, why retire? The day I retire is the day I drop dead, I retire.
This is a very, in my opinion, it's a very comforting story, because you're really living your passion every day. Every day you do something you love it. Yeah. And ladies and gentlemen, if you don't already know, with the many conversations I've had with Alex, it's always led to the fact that I can feel the passion, despite 30 years of him being in the business. It's stronger now than when I first met him. And that just shows that he is just going from strength to strength. So thank you again for joining this fireside chat. We've had an amazing chat with Mr. Alex Gomez. And being a veteran in this industry, he can also share, I also share his enthusiasm that this is a great industry to be in, and something that everybody can make their career out of, provided you pay the price. And to learn how to pay the price, as what Alex has said, just join an NCC program or go and listen to any of these sessions that are being offered by organizations or associations to just get exposed. And after that, decide what you want to do next with whichever agency that you feel comfortable with, that can give you the support that you need to take your career to the next level. Thanks again for tuning in. Thanks again, Alex.
You're most welcome, Anis.